Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein, and here we are on a seismic event day. Like that parody on words? As you know by now, today is Tuesday, and this is the 23rd of August, 2011. It's about 2:45 in the afternoon Chicago time. But about an hour and a half ago or so, 2 hours ago in New York, in fact, the whole East Coast region got hit by a 5.9 magnitude earthquake. Big time. And especially for that part of the country, they closed airports, they evacuated buildings, some people left the exchange floors, others stayed on, but it was definitely a scary event. We've seen some of the nuclear plants move from being online to going back to diesel fuel. It was neat in its own way. It's a test of what would happen should something happen, that the markets, while I believe they're getting tested, if you will, all these different facilities, it didn't, and from what I've heard, nobody got hurt, not big structural damage so far, so that's it. If things were the other way, you wouldn't be hearing me say this. I'm believing that we got through it in good shape for whatever that might mean, especially when you hear no loss of life. In the gold market, it appears to be we're getting a risk-on trade, but the risk is going back to the stock market. The risk off, if you will. People don't want that type of risk. They're selling the gold, and they seem to be selling the bond market. I don't know if it's more than a correction or if I'm just noticing it today, so can't really tell you. Euro currency, another strong day up today, not bad action. Certainly gave up the best part of the day 60 points ago, but it's still acting pretty good, especially relative to the dollar, and it's holding gains again against the Swiss franc, so that spread hasn't changed. We're also seeing a rally happen in the gas, be it the natural gas, be it the crude. They all seem to be gathering momentum. Now, this is the December gold chart, and let's widen it out so you can get a look at it. Today's high represents part of what's called a key reversal down day, an outside down day, a major top in a market that is 1 day so far in duration. Why do I say all that? The high, the low, took out Mondays. You're at the lows of the day for all purposes right now. Now, we know they're going to close the market higher than this because it was higher than this at the 12:30 Chicago time. But you can also see the markets right off the lows of the trading day, so you know where the real momentum is. What else can you see on the chart? You haven't taken out the last swing line low. That's really important, 1725.80. Even if you did, all you'd argue is that the market is making a trading top, and we'll see where the market wants to hover in. I wouldn't be surprised if this low isn't violated in the near future. I was just watching one of the major banks come out today with their analysis for the rest of the year, and they're pegging 1725 to the 2100 level. I thought it was interesting. I know where they got the low. The 2100 must be their projection as where the market might go the rest of the year. Where do I think support's going to come in? Right here, the 18-day average of closing prices. So I'm not looking for the market to literally fall apart here, and I do think that that's an area where a number of people that want to get in might take a nibble at the market. Let me tell you another thing that I'm finding fascinating. While the market's breaking down and is down $60, which under normal circumstances you'd go, wow, is this a wild day? It is anything but. It is orderly as can be as the market is working itself down and making these new lows. And I think that's a sign that the market's not able to pick up a lot of that momentum. It's probably got good buy orders just scaled down waiting for it. You can also see that the 45 and the 100-day averages are under the market. So this is where I'm looking for the layers of support. Buying the market up here, well, you know I wouldn't have told you to do so, and you know why. You're over the Bollinger top. And the one thing I know I'm a broken record on. You don't buy over a Bollinger top, and you don't sell under a Bollinger Band bottom. That are these black lines, and I'm just pointing them out in the gray here. Why? They're part of an algorithm designed to keep the market trading within it 95% of the time. I want you to think of yourself as the casino. You go to a place, and you'd like to have 95% on your side. And you do. by looking at this. If you're not buying over it, not selling under it, you do in your own way. The mathematics switch to you. That doesn't mean you're going to win. It means you're not buying up here, getting caught on these breaks. You're not buying up there, getting caught on that break. It does not mean the market's bearish. It means that the market, the odds of staying over those black lines are 2.5% of the time to the upside and downside, and that number shrinks when you go a certain successive amount in a row. The most I've ever seen just happen, it was 7. Typically, it's been 5. So I've seen a new trick in the market, if you will, that recently happened. Okay, that doesn't bother me. I still know the percentages are solid percentages. And when the market corrects, doesn't mean a trend change. It means it's getting away from that number. Now I start looking at it harder. The other thing I look at on the market is the momentum. Now, I want you to look at the slow stochastic. 79.70. It's under 80. The odds of it closing under 80 are not big because the market's going to close higher than this because of where it was at 12:30 Chicago time, 1:30 Eastern time when the official close comes in. Wish the exchange would make a change and tie the time back to the real closing time of these electronic markets, which now dominate the workplace. But that tells me that the odds of getting back to the Bollinger Band are even stronger. So I'm liking the game plan of looking for the market to fall down there. When it falls, or should it fall, I don't know which one of those it's going to be. If it gets there, it's going to be in something of an overbought condition. So you got to be careful of that. How long it'll stay down there? I haven't the slightest idea. The last $100 break we got didn't last very long at all, did it? And the market ran to the upside. The question is how much energy's been spent here. The positive for it is none of the real problems that have driven gold up as high as it did today to a new all-time high of 1917-19 have gone away. Sovereign debt issues are here. Did you see today's home market, the data on homes in the U.S. today? Makes you want to puke. Terrible. Terrible numbers. Not only aren't they selling, there's just nothing really going on that's good. And I can't imagine that employment data is going to magically just pick up here, but that's what we need. We need jobs. Let's look at the silver. And I'm going to go back to yesterday. This is silver on Monday's close. 2 days over the Bollinger top. Overbought, not even with an embedded stochastic. To me, the odds of staying over this number now are less than 2%. If it's 2.5% of the time, period, and you're 2 days in a row successive, it's less than that. Does not mean I'm bearish. Please don't overestimate the power of this. It's just a question I'm looking for pullbacks, all right? It's like that when the market's under the mark here. And today you're getting that pullback. So you went up, you made the highest high of the recent move, you dropped down, key reversal, outside day, probably has some volume behind it. So getting back to the $40 mark, very much, I think, just from a technician, in the cards, and you're overbought in this market. The copper market had fair footing today. Interesting. So the markets that have been going up in the metals are breaking back, and the copper market held on. Maybe the copper wants to get up here and fight its battle closer to that 18-day average of closes. There's nothing bullish on the chart, and should the market start taking out the most recent low, 394.5, you can make arguments there's more bearishness. But, you're oversold, and you've stayed oversold for quite a while. Crude oil. Really? So what? I'm looking for the resistance at 87.04, and then you have to take out 89.19 to get even more bullish. Let's assume that occurred. I first think that the bears are going to be waiting for the market at that number, and they might throw in the towel when you get over that high. What's their risk if you were to buy at 89.20? Well, on this chart right now, it's back under 79.38. So I think that if anything, I'm looking for the resistance to hit in, and I don't see a new buy signal. The gold-silver ratio, okay, hanging around here today at 43.94. It's not going anywhere. This is just going sideways as I'm reading it. The note market, something important's happening here. You've lost your embedded stochastic. You're down to 77. I'm going to look for more of a correction. Getting overly bearish on the notes of the bonds, it's very difficult when Uncle Sam is waiting there for 2 years to keep interest rates very, very low. So I think you wait for the technical signals to only flash the buy area, and you let the sell signals go elsewhere until you know that Uncle Sam isn't going to play that game on you.